Glad to have you back for another installment of Inside Asset Management. In this episode, we're examining what an asset actually is and having a look at the various types like equities, fixed income, alternatives, and multi-assets. Simply put, an asset is something you own. The type of asset or asset class you might be most familiar with is equities, sometimes called stocks or shares. When you buy an equity or share, you get to own a little bit, a share of a company. It's your piece of the pie, your slice of the cake. You get the picture. If the company does well, its share price can rise, making your shares worth more. The company may also pay out some of its profits to you in the form of dividends. Of course, the company might not do well, and the share price can fall. So when you invest in shares, you also have to be prepared to lose money. Another type of asset you might have heard of is bonds, or fixed income. Bonds are a way of lending money to governments or companies, kinda like a loan, but one that's traded on the financial markets. The borrower pays you regular interest and then has to pay you back after a set number of years. Investors like to buy bonds because they offer a steady, predictable income, and their performance tends to be more stable and less risky than shares. So, we've covered equities, check. Bonds, check. Next up, alternatives. So called because they are alternatives to the traditional asset classes of equities and bonds. These include things like hedge funds, private equity, and real estate. Although they're all grouped together under the term alternatives, these asset classes are very different from each other and all behave in different ways. They're also usually more complex and, because of that, are typically only accessed through asset managers. You normally need to invest in alternatives over a long period of time, but they have the potential to deliver higher returns. Finally, there's multi-asset investing, and it's exactly what it sounds like. Because different asset classes do well at different times, many asset managers offer multi-asset approaches that spread their clients' money out across equities, bonds, and alternatives. They use their expertise to invest flexibly, changing their clients' allocation to the various asset classes as market conditions change. Different types of assets suit different investor needs. Asset managers can help their clients to invest in the asset classes that meet their needs. Now that you have a better grasp on assets, think you've got what it takes to manage them? Check out our careers page and keep watching for more episodes.